Liberty Nation with Tim Donner.
It is challenging to envision 2021 being any worse than 2020. The Fed has already eased monetary policy. The federal government has spent trillions of dollars. The coronavirus vaccines are being distributed. The 2020 presidential election is complete. The last two giants of old Hollywood, Olivia de Havilland and Kirk Douglas, have perished. Hunter Biden already dropped off his laptop at the computer repair shop. If anything, 2021 could be an improvement from 2020. But that is easy to achieve when the bar is as low as the Seattle Mariners championship odds. And with apologies to the good folks of Seattle, those are the words of LibertyNation.com economic guru Andrew Moran, looking forward to 2021. And as we hope for a return to the boom days up through March of last year, we wonder what has fundamentally changed in the U.S. economy because of COVID and the election, as we look forward to lapping up on safer shores, so to speak, in 2021. And Andrew joins us now. Hello, Andrew.
Hello. Thank you for having me.
Always a pleasure. So let's start with a baseline question. What is the best reason to be optimistic about the economy in 2021?
Well, I don't really know what you could be optimistic about. I mean, even if the coronavirus pandemic fades, you still have millions out of work. Small businesses have been decimated by all the coronavirus lockdowns or restrictions, plus all the debt they incurred. The federal deficit has exploded to $3 trillion now a year. And, and it seems the only people that are benefiting in this type of landscape are the investors in the stock market. And when you have only about a little half of the country in the stock market, then you still have millions of people who are suffering. And also the other factor is that the only thing that's keeping this whole COVID economy going is the congressional relief, which is costing trillions, and the Fed stimulus, which is also resulting in trillions being added into the market. So, for how much longer can the training wheels will be needed in this economy is anybody's guess. And this, of course, creates its own problems with these training wheels, that you have higher inflation, specifically as we've discussed before about the things we need. You look at the food price inflation, you look at the housing inflation. Perhaps we'll be immune to this barrage of bad news in 2021 because of how disastrous 2020 was. Unless, of course, again, you were an investor.
Well, you've already partially answered my next question, which is the polar opposite of the first question, and that is, what is the best reason to be pessimistic about the economy in 2021?
Well, I think for that would depend on this whole new coronavirus strain that the media is going hysterical about. Right now, it seems that they're saying that the vaccine will be effective in fighting this new strain, but unless it contradicts their need for control and draconian measures, and perhaps they'll change their mind. And Anthony Fauci was suddenly declared to the heavens saying, "Oh, this mutation is horrible. We got to lock down even harder than before." So perhaps that will be the thing to be most concerned about or pessimistic about. And of course, everything else I just previously mentioned about the debt and deficit and inflation and all that jazz.
So, Andrew, you've talked about this somewhat already, but unbeknownst to most people who were just trying to survive the pandemic, the U.S. national debt, already at dangerously high levels, shot up more than $3 trillion in 2020 to a total of more than $28 trillion. So how concerned should we be about that? Why? And what are the immediate impacts of the increased debt?
Well, the immediate impacts probably will not be felt too much because of how low interest rates are. You have, about near 0%. The real yields are in negative territory. So I think in the immediate term, you don't have to be too worried. The problem is the long term, of course, because this debt will eventually need to be repaid. Once rates are normalized, then the debt servicing payments are going to explode. Right now, I think the U.S. government, even in these types of rates, is paying about $300 billion a year to service this debt. Now that said, I've been warning about the debt for so long, but the issue is that politicians have seemingly mastered the art of kicking the can down the road. So who knows how much longer they can keep up this charade. So So I think to summarize, when it comes to problems with the national debt, is that, it reduces private sector investment, it cuts consumption spending, it leads to higher inflation because you have to print all this new money in order to keep up with the whole deficit finance spending. And of course, I think another important issue that not even a lot of economists discuss is that the deficits distort our sense of the role of government. Because what happens is that the deficit allow politicians to promise the moon to everybody. Everyone's a Santa Claus in Washington all year long. But what happens when the rules of accounting come crashing down to earth like an asteroid? Then it completely obliterates everyone's sense of what the role of government is, which, according to the Constitution, anyway, is that the federal government's involved of the military, immigration, and that's pretty much it. So deficits are bad, and deficits and debt is bad all across the board.
Well, now you write that in 2020, these are your words, gold glitters, silver shines, and Bitcoin booms. Now, Andrew, we don't usually ask for investment advice when we have you on the show, but is gold a good investment as a hedge against inflation since it has great intrinsic value, or not so good because it's not at all liquid?
Well, the way gold and as well, of course, silver are performing right now does suggest that the financial markets view the metal as a terrific inflation hedge. One of the reasons why gold has exploded over the last 9 months is because everyone's fear about inflation. That's why the markets were, at least gold and silver markets, were so volatile during the whole congressional debate about the stimulus project. Because if they're approving a $1 trillion stimulus bill, that's going to be $1 trillion added into the money supply. So, and I think another issue too, you just mentioned, is that gold has an intrinsic value. It has inherent worth, and even Warren Buffett is now admitting that gold has worth as both a precious metal and an industrial metal. Because for so long he viewed it as just something you put in a safe and you lock it away and that's it. But now with his huge investment in Barrick Gold, it suggests that he now thinks that either the U.S. dollar is going to crash or gold is a great investment, or it could be both. And I think there are other plenty of ways, if I may, to hedge against inflation. One of them is the cryptocurrency, as I mentioned with Bitcoin, although I think that's a bubble, but that's a conversation for another day. And I think another great investment opportunity in 2021 and perhaps 2022 is our agricultural commodities. They have been skyrocketing over the last few months: soybean, wheat, corn. So it's unconventional, but agricultural commodities could be a great inflation hedge in this type of market.
One of the big changes we seem certain to see, Andrew, with Trump leaving and Biden arriving, is our relationship with China. Did the market generally view Trump's audacious challenge to China on trade as a good thing or bad thing? And how are they likely to react to Biden easing pressure on China, as he undoubtedly will do?
Well, in addition to Liberty Nation, I also write about commodities and foreign exchange. So one of the most interesting things that I noticed during the whole Trump-China saga was you could monitor the market's reaction in real time. It was like watching a tennis match. If there were headlines saying U.S.-China near trade deal, the market would pop. And then if an hour later, there were headlines saying the next U.S.-China trade talks end, the market would drop. So I think eventually investors did become exhausted of the whole Trump-China fiasco, that they just bided their time until they got an agreement, and they did in January of last year with the phase one trade deal. But obviously, any disruption to trade is a bad thing to anybody. Whether you're the buyer or the seller, business or consumer, especially when it involves the world's two biggest economies. So I think right now the market is too ensconced in how the coronavirus pandemic is unfolding, and the rest is just noise. And once the whole pandemic subsides, then I think they'll start concentrating more on an issue like China.
All right, Andrew, thanks for joining us and giving us not an optimistic or pessimistic, but hopefully realistic view of the economy going forward in 2021. Thanks for joining us.
Thank you for having me.
Hi, I'm Lisa K. Donner, along with Mark Angelides, Sarah Cowgill, Tim Donner, and Scott Cosenza, and this is Liberty Nation.
Now let's take a look at the LibertyNation.com electoral leaderboard. It's still 238 for Joe Biden,
What if stories and legends can offer us the key to unraveling the hottest political issues of the day and apply their lessons to understanding the chaos of modern politics?
Impeach 45!
Only where freedom of speech is honored can people who look, sound, or think differently be truly free.
If you're discussing something that's difficult, the probability that you're not going to offend each other is zero.
President-elect of the United States of America, Donald Trump.
Donald J. Trump is now president.
With one click, Liberty Nation delivers tomorrow's news.
And remember, liberty.
Today.
All the time and everywhere.
LibertyNation.com.